lately. How do we identify big resistance levels? And this is the kind of content we like to go over. I'm there twice a week live with Don Master Mateo, going over trade recaps and sorting through all the emotional and mental problems we have as traders. This one's not really the emotional and mental side of trading. This is just technical analysis 101. What is considered big resistance and what is considered, resistance that a stock can blow through? And I think we've had a number of decent looking breakout charts in the past week that can really exemplify this point that I'm trying to make. So I'm going to start with ATER as the first chart that we're going to talk about. The first thing we have to do is identify the volume. I'm looking for big shish kebab green volume candles. That's what I call them. And right here on ATER, you definitely see the big green candles. And what I like about the ATER chart, yes, it's off its highs. Yes, it's kind of like a dead cat bounce. It's a beaten down chart. But what I like about it is you don't see these big volume candles anywhere in this chart's history, right? So what that kind of does for ATER is it kind of resets the chart, meaning where it's trading the massive volume is going to be the most influential area of the chart. And that's for ATER, that's going to be in the past 26 days. And that's why this breakout is working relatively well, right? Going back to the 200-day chart, I want to bring up another chart like ATER, but one that I wouldn't like. But they're very similar in nature, and that's going to be WKey. And we got a question about this today in the stock therapy episode. That's why you're going to see lines on the chart. But WKey is the same chart, right? You have this beaten down chart now seemingly having a breakout, but look at the volume difference, right? A, we're not trading all-time high volumes, and B, when you look left, this is the whole look left concept. When you look left, you see massive volume, kind of up here in the 10s and even further in the 18s and 20s, right? So there's a lot of overhead resistance when you look left. Take that back to ATER, and those same big green candles are happening now, right? So that's why I actually think that the ATER breakout chart has more merit. I'm not saying that it's going to work. I'm just saying it has more merit. It's something I'd rather trade than WKey that has the overhead resistance, okay? Let's take this concept one step further. CEI is a stock that's been spiking really well this week, and I was buying it in the 75-cent range. The reason being is over this 75-cent area, that's the last big green candles I saw on the chart, right? These are, I can get on a shorter time frame. When I saw this thing developing and I was buying it in the 75-cent range, on a short-term scale, the big green candles, the big green shish kebabs are here at 75 and 80 cents, right? And if I go back 200 days, the next big green candle, the next key resistance is this red stick up here at $3.10. Okay, so if I'm buying 75 cents, I'm thinking the next key resistance is $3.10. That's what the chart is telling me. So I would say that this has a chance to run, especially given the fact that the volume down here is way overpowering any of this volume in the past. But I will say that in the moment, I wasn't going to buy the stock before it broke out of this 75, 80 cent range. I needed it to do that in order for me to tell me that the breakout was working. And then I'm looking at the chart and the next key resistance I see is at $3. So yes, I think this thing has room to run. So let's compare this with another example. AMC is a chart that's kind of setting up right now. AMC is a crowd favorite. If we go back, if we zoom in on 20 days, it looks like we have a great little breakout. Maybe this $50 level sends it, right? But if I go any further back on the chart, I don't like the fact that there's overhead resistance. I don't like that there's big green shish kebab candles in the 60s and 70 areas. That bothers me. That makes me think that there's overhead resistance that can potentially stuff the move. It's very similar to GME last week, where you have this seemingly great breakout over 215, where it was consolidating really nicely here. But again, if we go back any further on the chart, it's not the same as ATER, right? We don't have big green candles that are relatively overwhelming what's going on in the past. All of the past action is much bigger and higher than where the stock currently is. So this is another scenario where I think, even if it does break out of this 200 level, we're just running into more resistance, which is going to stunt the ability for the stock to really run. So those are my 4 examples for today. I hope that does, give some insight as to how I understand these big daily charts and what is a big, a breakout over big volume. I remember AMC. Not to be too confusing about it, but I remember AMC, back in the day, this was a breakout level. You saw the big green candle. That's the next resistance that mattered. And it wasn't until it broke out of that range that this became back into play. And that's kind of emphasizing, I'm looking for big daily chart breakouts, right? And, for something like AMC, like this could, 50 cents could definitely send it, but it's not a chart for me because I don't like this overhead resistance that could potentially stuff the move. It gives me a very bad read on the stock, right? So again, this is the kind of stuff that we go over in stock therapy. Dom and I do this, live twice a week. And what we do is really field a lot of questions from you guys. It's a very tight-knit group of traders, really built for that beginner to intermediary area where, you're starting to recognize the patterns, but, there's a couple nuances that you still don't quite grasp, right? One person's definition of a lower high is another person's definition of a higher low. And it's a very confusing scenario because so many people have their own definitions. We try to break it down as simple as possible and make it as black and white possible, which is why this key resistance thing is a great video lesson, right? I'm not telling you, there's no gray area for how I read a chart. If there's overhead resistance that is nearby and it's meaningful volume, I generally stay away from buying those charts because I find that the spikeability in those charts is a lot less for a lot of underlying variables that big green candle of volume does create, when you look left. So again, if you like this video, definitely give us a watch. We go on twice a week and you just got to click the link below.